So next up is ZOMEDICA Corp. I have one more stock to break down after this, and that's going to be Naked or NAKD. And then so after that, I'll be finished for the morning. So if you haven't seen my previous videos this morning, go ahead and check those out, okay? So let's go ahead and dive in. So yesterday we closed almost at 5%. And this morning we're up almost 4%, okay? So ZOM is doing pretty well. So let's go ahead and look at the volume. Our volume is at 221,000. It's above that 150,000 that we like to see. It's not much above that, but it'll do. So let's go into where we're at right now. Let me first just go over the support and resistance line. So this is our major resistance line. You can see that we had trouble breaking past over here and over here, and then once we broke above that, it worked as support. You can see we bounced here, and right here a little bit. And then on the opposite side down here is our major support line. You can see that we were bouncing off of here about 3 times. We bounced over here. So these are heavily tested areas, so you guys, we have to respect these lines, all right? Like I said, we are in the daily interval. This allows us to find our trend and our support and resistance and all that good stuff, okay? So with us being under this support line right now, this is going to work as resistance. So at the 89 or 90 cent area, we have this major resistance that we have to respect, you guys, and we are underneath it. Yes, we are still in this downward trend. We haven't quite broke above this trend line. We're right at it right now. We're not really above it or below it, but it's showing that it wants to create this reversal. And even on the RSI, you can see that we were oversold back here and trying to correct. However, getting in right now with this resistance being so close, it wouldn't really make that much sense for profit wise, okay? So what we want to see is this to actually break above this 89 cent area or this 90 cent area to come up and come back down and retest this as a support. We can if we can do that, that'll further confirm that buyers are stepping up. It'll break the downward trend that we're in. It'll put us in that that upward trend and create that higher low that we want to see, and that'd be the best ideal entry with risk to reward ratios and all that good stuff. Your first target would be back up here at the $1.29 area, which would make a great return if you were to get back in at the 90 cent area, if we can get there. The other ideal entry, you guys, is that if we do come up to this 89 cent area and get rejected, then we would be continuing this downward trend, and then from there our next stop is this red line over here, which is our next tested level of support, and that is the 33 cent area. I'm not saying that we're going to be hitting that 33 cent area, but it's a possibility is what I want to say, because we can come up and retest this resistance and continue this downward trend and come all the way back down here. So I always like to keep that in mind and tell people, hey, there's 2 opportunities here. We could definitely break this downward trend, create this upward trend, or we can fail and retest this area and obviously pull back. All right, so that's why I always like to give you guys 2 ideal entries or ideas of where we could be headed, okay? So yes, as of right now, we want to break that 90 cent area to further confirm that buyers are stepping up, that we can create this upward trend and create that higher low that we want to see for a reversal. Then that would be a good ideal entry. But as of right now, it would not be the smartest decision, okay? Until we can break above that, since we are underneath. But other than that, I just wanted to make this video really fast and efficiently, and if I did that, please hit that like and subscribe button. It allows me to create this content for you guys Monday through Friday. But other than that, I hope you guys have a beautiful day and happy trading.